The market seems to say that actually nothing's going to happen in terms of interest rate hikes until mid-2020. If there was a no-deal Brexit, would the Bank of England not almost have to hike if there was inflation out of control because the pound drops by so much?
No, there I agree with you, Francine. Conditional on no-deal Brexit, or for that matter, anything close, the initial impetus would be for the bank to try to cut to offset the shock, but I think they'd be forced into hiking by a pound crash and imported inflation. So, you know, if that happens, that's where it goes. The markets, essentially, by pricing in no rate hike until 2020, are pricing in no hard Brexit.
Adam Posen, bank to bank, including the challenges Mr. Carney has in theoretical banking, is there a Phillips curve analysis, or are we on to a new territory yet defined?
I think we're getting towards a new territory. Look, there's differing opinions on this. My colleague Joseph Gagnon, who you've had, is former Fed official, is about to come out with some stuff indicating that he thinks the Phillips curve is alive and well in the U.S. and can fit it. Other people are saying it's not there. My view is, if it's there, it's so flat, meaning you can do what the Fed's doing and what the Bank of England has been doing and wait for the inflation to come. It's not going to accelerate on you.
Yeah, Brian Levitt's here giving a Euclidean nod to the idea of where the slope is on the Phillips curve as well. Your world at OppenheimerFunds is there's no real rate. Where's the risk-free rate right now, old wise one?
Well, I mean, the neutral rate for the Fed funds rate is...
No, that's our start. I want to know where the risk-free rate is in investment. This is the CAP-M theory, Dr. Posen. This is the Y-intercept, Dr. Posen, that we're arguing. Where's the Y-intercept right now?
I think what's most important is we need to keep interest rates low for a long period of time. The Bank of England can't move. The Federal Reserve can't move. I mean, we saw, Tom, the Federal Reserve attempt 25 basis points a couple of years ago, a series of rate hikes in 2018, very disruptive to the markets, strong dollar, slower economy, deflationary impulses. So we can't go down that path in Europe, and the United Kingdom certainly can't go down that path.
Put another way, Tom, what you're implying is the neutral rate is really, really low. It may not be negative, but it's really, really low.